and welcome to another episode of the Business Finance Bulletin Xtra, an opportunity to get some industry expert views on small business finance tips and also news. I'm delighted today to be welcomed by two members from the Menzies team, John Cullen and Beth Evans. Welcome, guys.
Good morning. How are you?
Very good, thank you. Good. Well, first of all, Menzies. Well, Menzies is an accountancy firm offering a business, financial advice and services. They got offices in London, Surrey, Hampshire and Cardiff. So again, guys, welcome to the call. Just give me a little bit of an overview of what Menzies is and what it does.
Well, thanks, Rob. Thank you so much for inviting us on to your podcast. We're really delighted to be here and hopefully be able to add some value to what you already do over the course of weeks and weeks and weeks and years. So thank you very much on behalf of everybody who watches you.
Thank you.
Menzies is an accountancy firm. We're a mid-tier accountancy firm. We have 42 partners, and you've already told everybody that we're over a number of different locations. And you know, we like to we pride ourselves on not just providing accountancy services, because you know there's so many different areas where businesses can access accountancy services these days. But we like to think we are strategic commercial thinkers. Our idea is working with our clients and hopefully inspiring our clients. And as you'd expect from an accountancy business our size, we can offer the general practice and the compliance, the tax advice, both national and international, as well as wealth management. But Beth and I specialize in business recovery and turnaround. We're both insolvency practitioners. And Beth heads up our creditor services team. So all in all, we provide an all-round service that we hope to clients.
Yeah. I mean, I'm particularly interested in the turnaround service because obviously looking ahead now, we're recording this towards the end of May 2020. And it's going to be interesting times ahead. So let's kind of start off. As we are here towards the end of May, how do you see the economy at the moment and what you think is ahead of us?
Well, I'll pick up on that one, Rob. I think that, we can already see the announcements that have, come out in the press over the last couple of days, showing that we are heading for a really deep recession, which I suppose is, unsurprising in one sense, given the lockdown, but also surprising in another sense, in that it's something that we haven't really seen for the past, for at least a generation. Historically, we saw boom and bust, the cyclical nature of that was very dramatic. We're now heading for something that is quite deep, and governments over the last 20 or 30 years have tried to make sure that is not so deep, and that there's a levelling effect on that big boom and bust. We don't see it, so it is something that it is that's the economy and the scene at the moment. Unemployment is rising, unfortunately, despite attempts for that not to happen. The scene is going to be, despite government attempts and government bailouts, is going to mean that there are more companies suffering and facing difficulties that they have to manage.
I guess this recession that's coming is going to be very different, John, from previous ones, in that you mentioned, Bethan, this is so deep, but this is touching practically every sector in the economy. It's not like a recession back in 2008 was really the banks, and that kind of led to some issues. This is at a sector-wide, John, isn't it?
Yeah, absolutely. And there's a positive and negative in that regard, in that it has been a tremendous hit for everybody. So it's touching everybody's lives. It's changing the way people do business. It's affecting people's mental health. But at the same time, unlike previous recessions, we are very much all in this together. And whilst, economically, and we are looking at economically, and I am mindful that, the real impact here is obviously people's health. but we're talking about economics today. That, you know, there are the people who are doing better than others in this environment, but effectively everybody's touched. So there's a benefit in that we're all in this together. So we're all focused on the right direction, which of course is the way out.
Yeah. Okay. Well, what I wanted to kind of focus on today is that we can kind of wallow in the past a little bit. We are where we are, and the danger is that many business owners can now get just stuck with rabbits in headlights syndrome. But you know, clearly we have to kind of reposition ourselves going forward to kind of prepare ourselves for this new world that's facing us. So what I want to have a look at is some of the kind of levers that businesses can move to make sure that they get themselves into a better place next year. First point, I guess, that we kind of look at would be like vision and strategy. What do you think businesses should be doing now while we're looking ahead to hopefully some kind of movement forward?
So I think the question is your vision and strategy working? I've been involved in assisting a reasonable sized business in creating their vision and strategy over the last 10 years. And one of the scenario planning that was done before the strategy was created was looking at two extreme scenarios, and the recent ones being a global open economy and a global closed economy. And when we test the strategies against those scenarios, we tested them at the time with wry smiles, thinking, well, this is never going to happen. Of course, we created the strategy on both those conditions, and hopefully the strategy will continue working because we're very much in a global closed environment at the moment, and the strategy is tested. But if you're finding that your strategy and vision isn't fit for the current environment, there is no harm revisiting it. And I'd recommend anybody looking at a longer term strategy and planning over the next 5 years, not only to create the profit and loss, not only to create the cash flow, the projected cash flow and the projected balance sheet. They're numbers, and the only thing I can guarantee you about forward projections is that they're going to be wrong. So, you know, look at your turnover, look at the extreme scenarios. What effect does that have on your turnover? What effects does that have on your strategy? And what effect does that have on your vision? Don't just look at, you know, the current environment, but look at open environments where where you find that people are working together. That's as much of a risk to business when your customers can source your product from anywhere around the world as a closed environment where you're struggling to get your product into certain markets. And you have to have you'd benefit from having strategies that would cope with either scenario. So are you going to be working collaboratively with people? And when I talk about collaboratively, it's either within the UK or even on a wider basis, you know, internationally. You may find you have to collaborate because of closed doors, you know, working with your competitors. So it's never too early to test your scenario, to retest your scenario, and to retest your vision.
When you're looking at vision and strategies, I guess you have to work off the assumption there are no sacred cows within the business. Everything has to be on the table for review, I guess.
Very much so, including, you know, what your products are, what you're supplying, who your customers are. And we've seen that with the restaurant trade to a certain extent. A lot of restaurants now are offering a takeaway service and reaching customers that they've never reached before. So they're looking at capitalizing on, you know, their strength and maintaining a turnover that was suddenly brought to an abrupt halt, you know, completely unexpectedly.
Well, let's pick up on that point about products and customers, again, about reviewing. We can kind of be reviewing the vision of the business and the strategy as we enter this new world. What do you think businesses should be doing as regards looking at their product set and also the customers that they deal with?
Take myself off mute. It's really a question of, it's horses for courses. So it depends on what you're supplying. Are you still able to access your customers in the similar way that you were able to access your customers? Is your product fit for purpose. We've seen, as I've mentioned in the restaurant trade, people branching out into the takeaway service and actually branching out into feeding the key workers, which is great. But when you look at people who are in a slightly more advanced stage of dealing with the current conditions, somewhere like Hong Kong, we've got restaurants that have reopened. We've got, but obviously where tables are socially distanced and at appropriate levels. So how does that effectively affect your turnover? Where are you going to, are you able to make the type of savings to operate on a smaller business if you have to? Are you able to diversify into other products? We've seen certain manufacturers turning their heads directly towards supplying protective equipment for our key workers. Is that a possibility? And that's the type of thing that businesses should be looking at, whether one, that their products and their customers continue to require exactly what they had before, and if they don't, what changes can be made to the business to really sort of leverage the customer's need going forward.
Yeah, I also guess it's, Beth, I guess it may be a case of how we deliver as well. We're beginning to see surveys coming out that businesses are looking, well, do we need to change the way in which we kind of interact with our customers? Obviously, people are now looking more at technology like we're doing now. I mean, you see more of that coming through, Beth?
Yeah, absolutely. I mean, it's all about what the customer demands ultimately, and we need to businesses need to look to see if they can adapt to service that demand, and supply that demand. And yeah, we are seeing that in the virtual world. We're changing. The service sector is changing to providing advice in the virtual world, and the goods sector is changing to supply goods very much online, and delivery services are really taking advantage of the logistical sector, transport and logistics, very much more so. So it'd be interesting to see how people embrace that and how that develops over time as well. If you want to sort of really think forward into the future and be a bit of a futurist, are we going to see the likes of Amazon dropping our deliveries by drone? We know that that's something, a thought that has come out, and I think that the future could very much look like like some of those films that we've seen historically.
Yeah, I mean, we're starting to see evidence coming about how we're adapting to this new kind of virtual reality world. I mean, here now people are signing wills virtually. People are accepting finance deals virtually. How is this impacting on your world about the fact that you can't physically see people, whether it's on the accountancy side or the insolvency side? How are you adapting to this world?
Well, I mean, we're really lucky that we've got the technology available to us, and I do thank thank our lucky stars really that we're going through this pandemic now and not 20 years ago, because things would be very, very different. But so yes, we have this technology, and so we're able to do a lot of what we've done before, just virtually, because we can still see people. In terms of the role that John and I play, we're bound by legislation, and the legislation can quite often be quite old. And previously we were bound by a set of legislation that was written, back in the 1980s. Thankfully, we had an overhaul of that legislation about 4 years ago, and that legislation enabled us to do meetings virtually. And actually discouraged us from holding physical meetings. So it really does mean that we're able to continue doing what we do in terms of helping businesses without any sort of barriers in the legislation. That said, there are still certain aspects that need to get a bit more up to date. The courts are working very quickly to embrace virtual technology, and you'll see that a lot of court cases are still able to go on, and that's improving as the days and weeks go on. But there are certain places where, such as the land registry, that won't accept digital signatures, for example. They need a wet signature. And you can understand that because of the fraud risks, but we need to start thinking maybe outside the box to deal with things like that.
Yeah, okay. We talk about things that are changing. I mean, one of the things that's not going to change, because it's always a perennial pressure point for businesses in terms of cash flow. And one of the concerns that I've got is that, yeah, we seem to be getting over the funding problem at the moment with the CBILS loans and the bounce back loans, etc. But I'm looking forward to, say, probably Q1 2021, when perhaps businesses start to grow again, and we know that growth brings along working capital needs. What do you think businesses should be doing now to prepare themselves for making sure that their cash flow position is in tip-top condition?
I think, when anybody's looking at cash flow, you've got to start with the cash flow models. You've got to start with the three-way forecasting models to really look at what that could look like in March 2021. Those models will take into account, as you say, CBIL loans, business rates relief, VAT payment deferrals, corporation tax time to pay agreements and the like right now and for the next couple of months. But you're absolutely right, you're pushing a lot of debt into next year. And so those models need to take that into consideration next year. And so rather than just doing a 6-month cash flow, those cash flows need to be at least 12 months, preferably 18 months. Now, going back to one of the points that John made earlier is that, they will be wrong because, we don't know what the future holds. The key to those cash flows is testing them and also looking at your strategy and seeing how strategy and the strengths and the weaknesses, the opportunities and threats that are out there can impact on those cash flows, and really thinking about the different types of scenario that the business might face. You're never going to get it 100%, but if you've thought about those things, it does offer the business protection in the long term, and certainly it offers protection to the directors from any criticism that might come in the future if things don't work out.
I've often seen, and John, no doubt you've seen it as well, many businesses of never really proactively wanting to engage in any cash flow forecasting. But I guess in times like this, it really comes into its own, doesn't it?
Yeah, absolutely, Rob. I think sometimes business owners know their business really well. So they understand their environment and they have all of the experience to do that. And there's no criticism there. I guess the forecasts are really helpful when things aren't going to plan. So that you can begin to make decisions. Now, some business owners have said to me, well, how is the cash flow going to help? Because, if you're saying that the only thing you can guarantee about the cash flow is that it's going to be wrong, how is that going to help us? Well, it demonstrates patterns, it demonstrates risk. So it enables business owners to really make decisions where they understand the environment that they're making those decisions are either risky and the level of that risk and where that risk lies. Because I don't think we should forget that on the other side of the downside, there's the upside. There's the coming out of the recession. And I'm old enough to remember the 1990 hit. Which was a very deep and sharp shock, and the climbing out of that was a real problem for a lot of businesses because they were successful. They were over trading because they had so much demand. Now, I'm not saying that's going to happen in this environment, but it could do. And without numbers to support that, without some sort of indication, you can't manage over trading. The natural inclination of a business owner is to find supply and find customers and service them. But the risks in doing that without some sort of model showing you that you can fund that service are immense. Yeah. So they help you along that way.
It's a very good point. I mean, the stats show, isn't it, that typically a lot of businesses fail coming out of recession more so than going into the recession. And I guess many business owners don't realize this correlation between sales and cash. Many business owners' definition of success is, I did £1 million worth of sales last year. And if many people want to kind of grow out of problems, but of course, if your terms of trade work against you, trying to grow out of a problem actually makes the problem even worse from a cash flow perspective.
Absolutely right. And I think managing that with numbers helps. So, you've got a cash flow, you've got your model, that's absolutely right. You've got your projection for your P&L, your balance sheet and your cash flow. And, it's not a document that's set in stone. So you've got a document, a model that can change. So it changes for the environment, and it gives you information that allows you to make the decisions you need to make sure that the business in 6 months' time remains healthy. Yes. So absolutely. The real risk that, I remember back in the early 90s, I was at my most busiest on the way through to the upside, the boom period. And lots of good businesses really suffered. So it's, businesses need to make sure that they're in a good place to ride the upside, which is a strange bit of advice, but certainly a bit of advice that I recommend.
It's very valid. And I guess, Beth, now is an important reminder for businesses that it's important to actually know your numbers. What kind of things should businesses be monitoring to make sure they don't fall into these traps in terms of this kind of know your number mentality?
So I'd be very much monitoring the cash position and monitoring whether or not I project that I'm going to fall into a position where I don't have enough cash. I would also, by looking at those models, you can see if there's a big cash hole, and you can then, with time in your favour, go and make the relevant applications for further funding from that. Be that your bank, be that your investors. You could really start to put yourself in a position where you're going to be to trade out of this. You also need to to look at the cash position right now, and see what you can do to manage that cash in the interim period, like I said. So taking advantage of any reliefs available, but also
no, sorry, this is really interesting, obviously, that we focus on cash, because many businesses, as mentioned earlier, they'll have the measure of success being sales and profit, which will be contained in the management accounts. But I'm hearing more and more, and this conversation is proving it, that really the focus has to be on cash, isn't it?
Yeah, absolutely. The age-old saying is "cash is king," and that's that saying's there for a reason.
Good. Touched upon looking ahead to 2021. Certainly, the one thing that does concern me is kind of the mounting level of debt that businesses are currently taking on now. What's your kind of view on that?
So there's been a lot of noise around wrongful trading and whether directors of businesses will be guilty of wrongful trading, sort of worsening the position for creditors if they make certain decisions poorly. Now, you've probably heard there's some emergency insolvency legislation going through Parliament to suspend the wrongful trading legislation during this difficult time. But that doesn't mean that directors of businesses should take their eye off that particular ball. They still have a responsibility to make sure that their stakeholders are don't suffer because of the decisions that they make. So when it comes to making decisions about the amount of debt that you're taking on as a business, you have to be mindful of all sorts of other things, the position you're putting other people in, and that can be your supplier down the road, that can be HM Revenue and Customs, that can be your bank if you're applying for assistance from your bankers. You need to be able, at least today, to make decisions to look after not only your company but the stakeholders involved in your company. That's the right thing to do. So, Rob, it's really difficult because you're looking at what's happening in 2021 and you've got to make some assumptions. So my recommendation is those assumptions in good faith.
Yeah.
If you follow that principle and you look at your cash flows and you've modeled your cash flows and you've looked at your business and you can see that your business in a certain scenario has a strong, getting extra debt at this particular moment in time will put your business in a much stronger position.
Mm.
You should look to go and get access to that funding.
Mm.
At the same time, if you can't see a way out of this, it's an imperative that you don't look to increase worsen the position for creditors, irrespective of where we are with wrongful trading. So, it's not a question of getting the decision wrong, because there's no guarantee that your forecast will be right. It's a question of making the decision based on as much information as you can get hold of, and making those decisions in good faith.
Yeah.
And then continuing to monitor it.
Beth, I don't know whether you've seen any of your clients coming to you, but we're starting to get calls from businesses, who have been rejected for their CBILS applications, where they obviously see I have to have this money, it's going to keep me going. And the figures coming out show that the CBIL approval rate is only about 50%. So 50% of businesses are being declined. And obviously many business owners are scratching their heads and think, well, hang on a second, the bank is 80% covered, they've got a guarantee from the government, this is as good as risk-free. But in some cases, I'm having very tough conversations with business owners and say, listen, let's look at your accounts 2019. You weren't making any money then. So what's going to be different now? Are you having those kind of conversations, Beth, with businesses or owners who are scratching their heads thinking, why can't I get this money?
Yeah, definitely. And, one of the sort of the big pieces of advice that I'd give to anyone coming to me would be, don't try and make that CBILS application on your own. Get some professional advice and professional assistance. Make sure that the application goes in and it's watertight, and it's looking at your historic figures and whether or not you were a viable business before the crisis hit, but also looking at the future and whether or not you realistically think that there's a recovery for your business and when that recovery is, because a bank has a duty to look at those numbers and not to just give money into or throw money into a black hole.
Yeah, I've been obviously speaking to banks a lot over the last couple of weeks, and he said that what they're saying is that customers don't realise that exactly what you were saying, Beth, that they have a duty of responsibility and a duty of care to make sure that they're not exacerbating already a broken business. They've got to be responsibly lending. And in some cases, it's very difficult decisions, and it's very emotive for a business owner when they hear a no from a bank and don't want to necessarily hear the rationale behind it. That's, listen, we are literally just giving you money now to keep you going, but is it not just delaying the inevitable?
Yeah, and you've got to. The banks will also be looking at the ability to service that debt in the future. So looking into 2021, is this business actually going to be able to service this debt going forward? And that's another reason why getting some professional advice on putting together that application is really important, because you need to have a look at those cash flows and maybe tweak things and look at different things that you could change in the business to make sure that it can service that debt in the future if it was to take it on.
The Chancellor has said a few times now that we can't save every business. John, you said you've seen a few recessions over the years, like I have. The kind of school of thought that sometimes recessions are necessary in order to perhaps make space. What are your kind of view on that?
You're absolutely right. There's no doubt that recessions can have huge impacts on people's lives, that however necessary they may be. Certainly sometimes a buoyant economy can often support businesses that may not be fit for purpose. And that in turn has a real personal impact on people's lives, people's family. And we shouldn't forget that. If I can offer a crumb of comfort in those regards, especially in the 1990s, I worked with a number of different people who felt that their economic world and their family world had come to an end because of the deep and dark recession that they'd found themselves in. And I found some of those people several years later working well in really successful environments. It's easy for me to say it's a moment in time, but it is a moment in time, and it helps when we remember that. And that almost brings me back to, you know, the other thing in relation to what we should be looking for. If, you know, if we don't have the cash, the other important ingredient to turning around a company is time. So, you know, you're looking at creating cash and you're looking at creating time. But, you know, I agree with you, Rob. You know, it's a natural cycle of business. This is an artificial economic environment we're in at the moment, brought on by something that's a lot more dangerous in relation to our health. But it's boom and bust, until recently was a natural part of the economic cycle. And there'll be good times after bad times.
Yeah, and it's really now about going back. We were talking earlier, Bethan, about positioning yourself so you come out of this stronger. If we kind of close this up with some of the risks that businesses perhaps other risks that businesses should be looking at now, aside from financial risks, anything you think that should be on business owners' radars now, as they position themselves for hopefully an upturn over time?
Yeah, so I mean, you know, business risk hasn't changed. You know, there's still the same business risks there now as there always have been. But I think that people should be aware of you know, the wider contributions that they're making to society, and you know, given that we're working much more in a virtual world and taking advantage of the internet and social media, I think businesses have to be very aware of their reputation. And you know, things that they post on social media, you know, are going to face you know, the greater public criticism, and public opinion is very much focused on at the moment on kindness and the environment, and so I think those are quite big business risks that maybe people are not necessarily focused on, because they're focused on their cash, their product, their market, economic factors and their competitors. So don't, what I'd say is, you know, don't take your eye off those sort of social and environmental factors, because they could be big.
Yeah. What about you, John? What do you think businesses should be focusing on as they kind of press the reset button?
Well, if they look at their strategy and really test their strategy against disaster scenarios, in some ways the risks don't change as they go forward. So if you're looking at your business risks generally, and coming across as what we're in at the moment, a really sharp recession, the business risk hasn't changed from when you set the strategy. So it's really a question of planning. The risks to business may increase and decrease, but they don't change. So the more thought you can give to risk, and the more good governance you can implement in relation to your business, and that's good governance, doesn't matter what the size of the business is, you can implement good governance and good process and great management information. You're managing that risk, and you're creating a platform to really set your business going and let it fly. So I don't think the risks to business have changed. Just some of them have got bigger and some of them are less prominent. And I think, like Beth, the real risks to you are the to go to that horrible quote, the unknown unknowns. So the more you can give some thought to those, the better.
Yeah, no, it's really good. Great. Okay, we're coming to the end of our time now. We've got kind of one last message, Beth. Do you think that one key thing business owners should be thinking about as to where we are today?
Yeah, I mean, it's very much about looking to the future. I think, you know, like you said at the beginning, Rob, you know, we can focus on the past, but really we need to look to the future. And, you know, the economy is not great at the moment. Will get better. You know, we will, and the scientists will catch up with, you know, with this virus, and they will find a treatment and or a vaccine, and that will give us some optimism. And with optimism, that will allow us to start to really see the future a little bit more clearly, and people will start to, you know, plan their futures and therefore spend more. And so we will see an economic recovery. So, it can be a little bit doom and gloom, but I would like to sort of end on a positive in that it will get better.
What about yourself, John? One parting positive thought for what business owners should be considering now?
Yes, for me it's communicate. I find I need to talk to more and more people. I'm delighted to see you today, Rob. I communicate as much as possible, and it's not just to your professional advisors. It's with the team that are working around you. It's with your colleagues. Importantly, it's with your competitors as well. We are in this together, and we should create an opportunity for us all to move through this together. So communication, I think, is critical. Both from a mental health perspective for the people, for yourself and the people around you, right, but for the business environment generally. So, reach out to your professional advisors, reach out to your competitors, talk to them, share good information.
Great advice there. Good stuff. We're talking about reaching out. How can people get hold of you? So, John, what are your contact details if people want to have a chat with you?
So I'm at Menzies. My email address is jcullen@menzies.co.uk, and I'm easily available. I don't go very many places at the moment, so you're likely to catch me whenever you need.
But the people who are watching, as opposed to listening on the podcast, John, has a very sunny background and a very summery shirt. So you're making your virtual trips.
Yeah, I don't have a window onto 10B, but I pretend to.
That was good. That's excellent. And Beth, how can people get hold of you?
Yeah, so my email address is bevans@menzies.co.uk. My profile is on the webpage, menzies.co.uk, as is John's, and you'll find my contact email address and my telephone numbers on there. And like John, I'm not really going anywhere anytime soon. So, I'm in front of my computer and drop me a message, give me a call.
Yeah, perfect. Hey guys, thank you very much indeed. Some really useful insights there for businesses who want to look forward and plan ahead and to make sure that they've got a safe and profitable future. So thanks very much again for your time. And for those watching and listening, thanks very much for joining us on this Business Finance Bulletin Extra. Look forward to being with you again next time. And don't forget, we have our weekly bulletin, which comes out every Monday as well, looking at small business, finance news and tips. Thanks very much, guys. I look forward to speaking to you again soon. Bye-bye.
Thanks.